Started.
Excellent. Well, thank you, Stephanie. Thank you for that introduction, and thank you to everyone for sticking around for the final session here, Cryptocurrencies, a banker's friend or foe. So let's see if I can get this to advance. I think we've got about 45 minutes together. So these were the topics I wanted to go through. I wanted to give you a little bit of background on sort of where we are in crypto today. I'll take you through some of my ideas of where some of the threats might be to banks. Also talk about where some of the opportunities could be. Give you my ideas on what types of things you should be doing. A final thought, and then hopefully we'll leave some time for Q&A. So throughout this, my plan is not to speak to you like crypto experts, nor is it my plan to talk to you like you're totally oblivious of crypto. I'll probably be unsuccessful in both, but my attempt will be to kind of walk that line. But certainly, if you have questions, I'll welcome them at the end. So Stephanie did a great job of going over my bio, so I won't focus on that at all, other than to give you a little bit of background on the firm's involvement with crypto. And, as Stephanie mentioned, I do lead the firm's technology niche, and that sort of naturally led me to crypto, which then led to a firm-wide strategic planning process that we undertook in May of 2018. And at that point, we identified blockchain generally and crypto more specifically as an opportunity we wanted to pursue as part of our 5-year plan. And since then, we've been doing that. We built out a cross-functional team to pursue this. And what I mean by that is we have participants from all of our service lines, accounting and auditing, tax compliance and consulting, and all of our risk management groups are now out there designing and delivering crypto-specific service offerings for our clients. So just a couple of caveats before we get into the presentation. These are my opinions only, and they really are opinions. This is an incredibly dynamic industry, and things are changing dramatically, and all we can do right at this point is guess about a lot of things. I'm very comfortable in the technology world. Where I will admit to being less comfortable is in the banking world. So as I think all of this audience knows, there are lots of people that know lots of things about banking within Wolf & Company. I do not happen to be one of them. So if I misspeak or say something that sounds silly, that is on me, and not a reflection of Wolf & Company. So let's jump right into it. So just a few data points on where we are in the crypto market. So when I was preparing this presentation a couple of weeks ago, I had the crypto market cap at 2.7 trillion. And between that time and when I gave the presentation the first time, of course, it breached the $3 trillion threshold. And then by the time I checked it yesterday, it was back down to 2.6 trillion. So, needless to say, it is a very big market. Just as significantly, if you look back to where it was about a year ago, it was 350 billion. So a very big market that has grown very dramatically. It's also important to point out that there are more than 100 cryptos that have a market cap greater than $1 billion. And that emphasizes, I think, a really important point that, when I say cryptocurrencies or crypto or digital assets, many people's minds reasonably turns to Bitcoin, but Bitcoin is not equal to crypto. Bitcoin is just one of many cryptos, digital assets, as evidenced by the 100 or more that are greater than $1 billion in market cap. There are literally, thousands of digital assets out there. Bitcoin, albeit, is the biggest with sort of 40 to 45% of that total market cap, but just keep in mind, it is just one. The next sort of milestone I'll point out here is that the first Bitcoin ETF launched about a month ago, immediately went to 1.2 billion, which is about the sort of maximum for that due to some esoteric structural issues in the futures market. But I think the important thing here is that is validating the institutional interest in crypto. I think there's sort of a view or reputation that this is all just, crypto bros trading Bitcoin on their Robinhood app. And I think this evidences that it is significantly broader and deeper than that. And there have been and will be additional Bitcoin ETFs. So to say that the regulatory environment is nascent would be an understatement, and to say would be an overstatement, and to say that it's evolving rapidly would be an understatement. If you look at the current regulatory framework for, what I'll call traditional capital markets, that goes back to the 1930s, the 33 Act, the 34 Act. The current regs just were not built with anything even remotely resembling crypto in mind. So, the SEC and the chair, Gary Gensler, has been particularly vocal on this. And people ask me frequently, like, so, how does the industry feel about regulatory? Because there's this view of, kind of a bit of an anarchistic, hyper libertarian angle to crypto, and I think it did, was spawned from that, but I think we've moved much beyond that, because the crypto industry is really desperate for some regulatory clarity. As you all know, as business operators, you can deal with a lot of things, but uncertainty, and particularly regulatory uncertainty, is very, very difficult to deal with. And the last point, and maybe the most important one for this audience, is there's I think a bit of a convergence going on between native crypto companies, and by that I mean companies that started as crypto companies, and traditional banking. So I think crypto companies are moving towards the banking industry, and similarly, the banking industry is moving towards crypto. And those crypto companies are looking at offering banking and banking type services, whether that's an exchange, or Bitcoin ATM companies, or a payment company, or custodians. So where do I think some threats could be coming from? I think there's an interesting sort of generational shift going on in terms of how people think about financial services. And there was a recent study by a company called PeopleSay that asked them about crypto ownership, and the percentages are there, but the takeaways for me were that the Gen Xers have a pretty surprisingly high adoption rate. I'm the oldest of the Gen Xers, and 38% of that generation has purchased crypto. Millennials, they're sort of in the sweet spot of adoption, in that sort of 25 to 33 range. Almost 50% of them have purchased crypto. Gen Z, it's currently low, but I think pretty quickly they're going to look more like the millennials. I don't think that low number is particularly surprising when you think about the youngest Gen Z as being age 9. So not a lot of crypto buying power there quite yet, I wouldn't think. So, speaking of Gen Z, this is going to be the first generation that is natively mobile, which again, shouldn't be surprising. The first iPhone was launched in 2007. That's right in the middle of their sort of birth year ranges. And they will be natively Web 3.0. And, the point of this is not to go through the sort of history of the web, but Web 1.0 was very centralized, very static information. Think of like America Online. Web 2.0 was like mobile driven, dynamic two-way information. Think social media. Web 3.0 is decentralized, control over your own data. And crypto is a big part of that. And Gen Z is going to be natively Web 3.0. And then, the youngest millennials, that's the 25, they are less likely, according to the survey, they are less likely to have bank accounts and credit cards. So that's not surprising if the other part of the survey indicated that almost half of them own crypto. So, if the youngest millennials are feeling that way, think about how the Gen Zs may be thinking about this. And then all of this, I think, is just going to be accelerated when you get to the next generation, which is apparently called Generation Alpha. So, overall, I think the banks are at risk of potentially losing at least a portion of a generation of customers. So crypto could siphon off your core deposits. And just remember, again, when I say crypto, I'm not referring to Bitcoin specifically. I think there are a lot of digital assets and cryptocurrencies that would be a better analog to a bank deposit than Bitcoin, not least of all because Bitcoin is and has been very, very volatile. But my theory is that the consumers will go first. So picture a 25-year-old recent college grad. They've got a Robinhood trading account. They've got a Coinbase, which is one of the largest crypto exchanges. They've got a Coinbase account, and they've got a digital wallet to sort of manage all this. Now, just the idea of that digital wallet should be frightening. I think about what I might have in my wallet at any particular time: paper currency. Maybe I've got a check for an emergency situation. I've got a debit card. I've got a credit card. And I don't need to tell you where all those things come from. And then the decentralized finance, or DeFi. I think we're going to talk more about specifically what DeFi is. But for purposes of this discussion, it's allowing people with crypto to earn significantly higher yields. Now, you and I understand that you don't get higher yields without taking on additional risk. But I think a lot of these people, they either don't know, or even if they do know, they don't care. And this is why part of the reason why I think you're seeing millennials going without bank accounts. And I happened to be reading Barron's Magazine, which is a weekly sort of investment magazine, yesterday. And there was so of course they're writing a lot about crypto these days. And there was a letter to the editor from a gentleman who said, he basically, just, I'm paraphrasing, I got tired of earning almost nothing on my bank account, got tired of earning almost nothing on my money market. I took $10,000, I opened a Coinbase account, I bought an Ethereum token, and I'm earning 8.5%. And he admitted to, I understand that this could eventually, go away, but he was enjoying the experience. And I think that's the exact sort of scenario that I'm talking about. So, the second part of my theory is that they will then come for your corporate deposits. And I don't know if you've been following what companies like Tesla, Square, MicroStrategy are doing, but they literally have billions of dollars of Bitcoin on their balance sheets. Now, I'm not predicting that significant holdings of Bitcoin are going to become mainstream treasury functions in Fortune 500 companies. But if crypto can, what I describe as solve payments, then crypto very well could become a significant component of corporate treasuries. And we're going to talk a little bit more about what that means. So, the threat here is that banks could end up losing an important source of inexpensive funding. So speaking of payments, I don't know if you saw the announcement a couple of weeks back, MasterCard and Bakkt partnered to offer crypto solutions. And I'd just like to read how the Wall Street Journal described it, because I thought it was pretty succinct. The partnership will make it easier for banks, financial technology firms, and merchants to offer and accept crypto payments. Banks and other financial institutions that issue cards through MasterCard will be able to issue cryptocurrency debit and credit cards that let people make payments and earn rewards in Bitcoin. Other cryptocurrency assets could follow. So, I mean, just a few thoughts on this. MasterCard is clearly a company that recognizes the threat crypto could play to the payments industry, and they're embracing it. They're leaning into it. In my opinion, this is only the first step for crypto. They're riding the traditional payment rails established by the MasterCards and Visas of the world. Eventually, I don't think they're going to need those rails, and they'll go around MasterCard and Visa. Now, I'll be the first to admit that a big knock on blockchain technology generally is that it's not fast enough. It can't handle the incredible volumes of transactions that MasterCard and Visa and the like process every day. And that's true, but it won't be true forever. And I think back to the early days of the internet. I remember when it was dial-up modems and beep, boop, beep, boop, beep, and a lot of experts were saying, well, this internet is not going to come to anything because there isn't enough speed here to actually accomplish anything real. And that got solved. And I think the blockchain speed and throughput issue will also get solved. So when I said solve payments, the threat here is that stable coins could be the payments solution. And if you look back at sort of our history with currencies, paper currency has a federally issued paper currency only goes back to the 1860s. Before that, you banks were issuing paper, and people were trying to use that as currency or whatnot. So 1860, we start having a consistent paper currency. Fast forward 90 years, you get the first credit card. Fast forward another 64 years, you get the first stable coin with Tether in 2014. So what are stable coins? So as the name implies, the value of those coins is intended to be stable, unlike a Bitcoin that is designed to fluctuate. I think of stable coins as a digital money market, with the exception that it is extremely easily transferable, 24 hours a day, 7 days a week at very low cost. So, if you think about a currency that begins and ends with software code, right? And I distinguish that from something that began with paper, and then we've tried to convert it, whether through credit cards or something else, to some sort of digital form. A stable coin is natively digital and as such is sometimes referred to as programmable money. If you have money that begins and ends with software code, it doesn't take a giant leap of faith to see that there's lots of things that you could do from a programming perspective to make that currency do what you want it to do. So the threat here, in my opinion, is just crypto, stablecoins, something could create a viable medium of exchange. And as a result, the need for a trusted third-party intermediary would be significantly diminished. So what do I mean by a viable medium of exchange? If you think back to that theoretical 25-year-old recent grad, if that person can receive their paycheck electronically in US dollars, easily convert that to Bitcoin, easily convert that to stablecoin, and then use that stablecoin to purchase goods and services at Starbucks or Uber or Amazon, then payments has essentially been solved in my view. And I think we can see who's missing from that sequence of events, right? There was no MasterCard, there was no Visa. This would be a true peer-to-peer payment system. So the threat here, in a word, DeFi. So decentralized finance, it means a lot of things to a lot of people, as you can sort of see by the graphic here. But I think of a few key components to DeFi. The transactions occur on a decentralized exchange, or a DEX. So think no New York Stock Exchange, no NASDAQ, true peer-to-peer. It's smart contract based. And don't get too caught up in what smart contracts are. It's just more software code. So if you tie software code, if you think about how many contracts are, if you were to take contracts and put them into software code, that would be a smart contract. So the terms of trade and settlement are dictated by that software code. And then trading on these decentralized exchanges or DEX is asset agnostic. And what I mean by that is that if it can be tokenized, right, if it can be made into a series of similar digital units, then it can be traded. And I've got a client, for example, that has taken collectible trading cards. They've tokenized them. and then they are facilitating trading in those trading cards, fractionalized portions of those trading cards. So if you can tokenize a trading card, you could tokenize a vehicle purchase, you could tokenize commercial real estate, you could tokenize anything. So the growth in DeFi has been enormous. There's about $240 billion tied up in these DeFi networks. A year ago, that was closer to 13 billion, so significant growth there. And I think the most important point here is that the lending and borrowing use case is just starting to be developed. So that tokenization process is pretty well established, but the lending and borrowing use case is really just getting started. So, the message here is first crypto maybe comes for your deposits, but then they come for your loans. Okay, enough doom and gloom. Let's get to some of the opportunities. So I think there's a legitimate opportunity for banks to actively go off after the crypto industry. They are literally desperate for some traditional banking relationships, and I know that is ironic based on everything I just said, but they are, and they're not like my typical tech client that could lose money for years and years and is dependent on venture capital or whatnot. There are many highly profitable, sort of cash-rich crypto companies out there, and their needs really aren't that complex. It's mainly cash management. There's a lot of, crypto. There's sort of a taint on the industry. Banks are legitimately concerned about banking them because of the potential regulatory blowback. But there are a limited number of banks out there that are going after this business. So I sort of see it as there's still a first mover advantage. There's a bit of a sort of greenfield opportunity there for banks that are willing to address it. So, I see a large, growing, frequently profitable industry out there that wants and needs the things that you have to offer. So that's a real opportunity. Leverage your banking license. And I don't say that flippantly. This isn't a suggestion that you auction your license off to the highest bidder, but that trend I talked about on the first slide is sort of the convergence of crypto and banking. Crypto companies are definitely moving to get banking licenses, right? They want to offer banking-like services, whether it's custodial services, prepaid cards, debit cards, checking or savings accounts. They want to offer those. The biggest ones, the Krakens and the Paxos of the world, they will get their own licenses, even though it's a long process and it's a costly process. They will get their own license. But the rest of the industry is going to be looking to partner with banks like yours. And it's not just the license. Your banks have a long history and a deep pool of experience dealing with the regulatory requirements. And the crypto companies do not have that, and they're desperate to get it. In fact, I would be surprised if your compliance people are not getting solicited by crypto companies. There's a huge demand for compliance people in the crypto industry right now. So, the message here is you have something incredibly valuable, not just the license, but all the skills around staying on the right side of the regulations. And that's really valuable for crypto companies. So new crypto regulations are your friend. In my opinion, this is not a question of if, it's a question of when. These regulations are going to help level the playing field a bit. Right now it feels a little bit like you have, the crypto industry over here doing whatever they want with no regulation, while you guys are over here with all the rules, and you're getting audited to death and stress tests and allowance for doubtful accounts and all that stuff. But that will change, and it will make forming partnerships with these companies less risky. And I did see what Michael Su said the other day, and I sort of sugar it down to proceed with caution. And I think that's sound advice. But I think if you could get some regulatory clarity, it would reduce some of that risk and some of the suggestions by the OCC to proceed with caution. So, the places where I think you should be looking for regulation to come up would be, the appointment of a crypto regulatory czar. This is the crypto industry's, dream come true. Their theory is that, think back to the regulatory history I talked about, goes back to the 1930s. The crypto industry's feeling is that those regulations cannot adequately encompass the crypto industry, and they need a regulator to create a set of regulations specific to their industry. Personally, I don't think there's any appetite in the current environment and the current administration to do that. But if there were movement in that direction, I think that would be a very positive sign. New regulations around stable coins. We talked about how critical those could be to quote unquote solving payments. And a report came out. There's been a lot on it recently, even beyond this, but Biden's working group and partnered with FDIC and OCC. The report came out. But I think if you were to see some new regulations around stable coins, that also could be very impactful. And then, the last point I have here is about enforcement actions from the SEC. Unfortunately, I think the message they've sent to date is that crypto is not going to get any specific regulations. The way it seems to me like it's going to proceed for the time being is regulation through enforcement. So if you see the types of actions that the SEC brings against companies or doesn't bring against companies, that's going to be the signaling to you what they're going to accept and what they aren't. So, just the summary here, regulations are going to help put you guys back on equal footing with crypto companies. So personally, this is my favorite, the crypto apocalypse. So, I don't think you have had to have been paying that close of attention to the crypto industry to know that it's been extremely volatile. There have been, violent run-ups and big sell-offs and crypto winter and lots of volatility over the years. But what I'm talking about here, I think, is different. So what I think it would look like would be a significant and sustained decline, not just in a segment of the market or in Bitcoin and Ethereum, but broadly across the entire crypto industry, the entire crypto market. So, some digital assets will go to zero. This is when we're going to find which of the crypto emperors are wearing no clothes. I think we've all heard about some of these silly meme coins and other things that really have no basis outside of social media. We'll see some things go to zero. Stable coins could break the buck. One of the big criticisms of them is that there's very little visibility into what is backing these coins. What does the coin issuer have as collateral to support that $1 fixed value? So we could see stable coins break the buck. And then this would really be the first true stress test of the crypto exchanges. Can they hold up when there is significant selling, panic selling almost? And we'll see how robust those systems are. And what it would cause, first of all, I think there'd be rapid political and regulatory reaction. You think back to the last couple of, crises. We had the dot-com bubble burst in 2002 and some of the accounting frauds that occurred back then. And we got Sarbanes-Oxley, and then you have 2008 and 2009 and the financial crisis, and we get things like Dodd-Frank. I think we'd get something similar to that. Those sort of reactionary regulations wouldn't be my preferred mode of regulating crypto, but I think that's what we get in this scenario. Individuals would feel the pain. That 25-year-old recent college grad really hasn't seen the type of pain that I think a crypto apocalypse would entail. Institutional investors, those people should understand the risks. They should have the capital to withstand a significant downdraft like this, but individuals would really feel the pain. And consequently, I think there'd be a flight to safety. And as a result of that, I think there'd be a renewed appreciation for institutions like yours, highly regulated, solid financial institutions. So the opportunity here would be to sort of recapture some of that wallet of that generation that you may potentially have lost previously. So what are some things that I think you could be doing? So this is normally the point in the presentation where I ask for a show of hands. How many people's banks have someone that either has the title or the responsibility of chief innovation officer, or entrepreneur in residence? Someone who's responsible for sort of staying on top of potentially impactful developments. And now would be the time in the presentation when I would typically see no hands go up, which I understand. I guess my point would be, I'm not advocating for a full-time FTE for this, but to have a committee or a task force or someone focused on innovation broadly and crypto more specifically, in addition to other things that are more sort of immediate potential impact to the banking industry, I think makes sense. And my bullet here is that I'm sure you have someone in your bank, secretly or otherwise, who is a serious crypto enthusiast. And the night before I gave this presentation earlier in the week, we were having dinner with some bankers, and I said, "Oh, I'm talking on crypto tomorrow." And he said, "Oh, we've got Juan, one of our credit analysts, and he's maniacal about crypto, and he'll come into your office and talk for 30 minutes about crypto." So I think all of you have a Juan in your bank somewhere. So, and that person would love to be a part of this initiative. So find ways to partner with fintech generally and crypto more specifically. Banking as a service, these companies that help connect fintechs, connect banking services to other fintechs or to crypto. So these banking as a service. There's a new term, at least it was new to me, synthetic banking products. It was created by Michael Su. So he actually described it pretty interestingly. He said, increasingly the three cornerstones of banking, taking deposits, making loans, and facilitating payments, are being reassembled functionally and digitally outside of the bank regulatory perimeter by certain firms. So, he's saying what I put into the presentation a couple of weeks ago. At least the deposit piece, this is they're coming for your deposits piece, and the making loans piece, that's the DeFi. So find ways to kind of partner up there. A simple thing is talk to your clients about crypto. This is where we started back in 2018, just sort of informally polling our clients. Like, well, what are you seeing, hearing? Is it impacting your business? Is it not impacting your business? And I think that's both individual and corporate clients. And then also in the trust department, I'm not advocating for an immediate 20% allocation of all trust accounts to crypto. I think that's ridiculous. But I think these types of discussions are better to be originated by you to your clients before you start getting asked more broadly from your clients. And you may already be getting those sort of bubble up questions. So task a banker with actively pursuing crypto customers. This is a growing and frequently profitable business. If you're looking for some inspiration, I would suggest checking out Vast.bank. This is a $350 million closely held bank in Tulsa, Oklahoma, that has really leaned into the crypto world. How much of it is sort of what I call crypto window dressing or crypto theater, I'm not sure. It doesn't look like they're doing anything earth-shattering, but they are definitely leaning into the crypto opportunity. Do a full strategic review that would include evaluating not just crypto, but I would say fintech more broadly and how it fits into your bank's future. that's how we started with this. Was part of a strategic review, and I think it would be valuable for you also. Watch the trends. So some of the trends that I think you should keep an eye on. I've talked about crypto becoming a true medium of exchange and this whole solving payments thing. Watch what happens with companies like Visa and MasterCard and PayPal. They're going to be the canaries in the coal mine if crypto is sort of moving to what I think of as phase two, which is circumventing the traditional payment rails. New regulations and SEC actions. Jelena McWilliams, I don't know if it's Jelena or Jelena McWilliams, the chair of the FDIC, was talking interestingly about how she would like to encourage banks to have a route to hold crypto, but then also be able to loan against it as collateral. And she said, and I quote, "I think we need to allow banks in this space while appropriately managing and mitigating risk. If we don't bring this activity inside the banks, it's going to develop outside the banks. The federal regulators won't be able to regulate it." So I think that ties in nicely to a lot of the stuff that's happening, this convergence of banks and cryptos and the need for banks to partner. We haven't talked about central bank digital currencies, but that would be something that I would keep an eye on. So if you imagine the Federal Reserve issuing its own digital asset, and what that would facilitate. So if the Federal Reserve were to be able to have a one-to-one relationship with businesses and citizens, I think you can see how that would be pretty disruptive. Jim Reuter, an ABA board member, described it as, quote, "a threat to core funding to the banking industry." So if the Federal Reserve could send, tax refunds and Social Security payments and COVID relief payments direct to individuals, that could be a serious issue. Now, I don't think the Federal Reserve is going to be the early adopter of central bank digital currencies, so I'd keep your eye on probably Europe or Asia. But I think if and when the first country issues a central bank digital currency, you'll see a bit of a dominoes effect to that. Lastly, I'll just mention inflation. So one of Bitcoin's main features, most well-known features, is that it has a fixed supply at 21 million Bitcoin. That is obviously not a feature of our fiat currency. So it can reasonably considered an inflation hedge. Whether it is or is not, I think it's too early to tell, because in its existence, we really haven't had a period of extended inflation. But if people believe it is, higher inflation, I think could drive more deposits out of banks and into crypto. That sort of movement that I highlighted earlier could accelerate, and it could also accelerate that movement to DeFi and people really seeking to have higher yields on their cash balances. So just sort of one last chart here for you. So this was something that was put out by the bank directors earlier this year, and it asked the question and then sort of bucketed it by bank asset size. And it said, over the past year, has your bank's leadership team discussed how cryptocurrency could affect your financial institution? And, some takeaways from me. And if you look at the left-hand column, that's the largest banks, greater than $10 billion in assets. I mean, no surprises here. 100% have talked about it. 2/3 of them think it's going to have an impact. There's a pretty big drop-off when you look at the next bracket down, that 1 billion to 10 billion. 1/3 have not even talked about it. That's surprising to me. 2/3 have talked about it, but 40% think it's going to impact them. But now if you skip to the far right column, the smallest banks, those are the under 500 million banks, $500 million banks. It's almost identical to the billion to $10 billion banks. That kind of surprises me. These seem like these are the smallest banks that are maybe the most nimble and most willing to take a little risk here. Maybe these are the vast banks of the world. Then we have this bit of a donut hole in the middle with the $500 to $1 billion banks. And they have the lowest numbers, almost half haven't even talked about it. That's really surprising to me. So if you're a bank that's either in the bracket below or the bracket above, I think there's an opportunity for you, because that middle bracket, that 500 to $1 billion bracket, seems to be kind of sticking their head in the sand a little bit with the crypto issues. So I'll leave you with a final thought. So Wences Caceres is an Argentinian entrepreneur, founder and CEO of Zappo Bank. It's a digitally first bank that has really put crypto sort of at the core of their bank offerings. And he says right now it feels like the internet before the browser. And I'm old enough to remember the internet before the browser, and when I thought the internet was the safe confines of America Online. You know, at this time, there's no possible way to predict what's going on. And back in that time, there would have been no way to predict what was going on. If you think about what we knew about the internet then, and what happened in terms of the adoption of mobile devices and Wi-Fi and social media, the cloud, and all those other things, all the other incredibly transformative effects that the internet has brought about. I think there's a similar phenomenon going on in crypto. So the bottom line, crypto, it's in its infancy. I think there are huge opportunities here that are going to have significant impacts. You're not too late, but you're not too early either. So the message is to act now. So just before I get into questions, just want to point you to a couple of things in the appendices here. I provided links to some of the things that I cited here, which I now know in the PDF version probably are not live, but I think you could Google these and find them readily. If not, don't hesitate to reach out. If this is something you're interested in learning more about, Wolf has a number of things that we could help with: border management training specifically around crypto, a more robust crypto strategic risk assessment, a more general risk assessment, plans and processes, and then digital transformation services. So I will take it back to here and open it up for questions. Steph, do we have any participants left on?
We have not received any questions. However, in our last panel, we did put an incentive. The first person to send in a question will receive a gift that has not been thought of.
I'd like to offer a Bitcoin, but I can't afford it.
But if anyone does have any questions, please send them into the chat now, into the Q&A box, and Scott would be happy to answer. And if you do have any questions after the conclusion of the event, Scott's information is shared on the screen, as well as everybody will be receiving a copy of the slide deck.
Yeah, and I'll just reiterate that and say, I know I ran through a lot of stuff quickly there. Some of it you may have understood, some of it you may not have. But hopefully one thing that came across is that I enjoy talking about this kind of stuff. So if you have any questions, don't hesitate to reach out. That is why my contact information is here.
Thanks, Scott. And I know we're looking forward to, having more sessions on this topic in the future. So I don't think crypto is going anywhere based on the presentation that you just gave, Scott. Oh, looks like some questions are coming in. This is great. All right. So the first one is, how will banks participate in stablecoin?
Yeah, that's a good question. So I think there has certainly been a proposal that has put forward the idea that all stable coins should be issued within a bank. I guess I would say that would be a more radical proposal. I think Michael Sue actually came out sort of against that and said, I don't think necessarily all stable coins need to be issued within a bank framework, but just depending on the specific fact and circumstances of the stable coin. But, I think the regulatory environment that you have and the confidence that you can give to a stable coin holder could certainly be valuable in a stable coin, particularly if it's after this sort of crypto apocalypse that I described, or if one or more stable coins kind of broke their buck on their own because of issues with the amount of collateral that was being held by the issuer.
Awesome, great. We did get a few more questions filter in. So the next one is, with crypto becoming more mainstream and potential regulation, do you see it being used less in scams and things like the black market?
Yeah, that's a common one. Obviously crypto is used for bad things. Suitcases of paper currency were used for bad things. Credit cards are used for bad things. Bad people are always going to find a way to do bad things, I think. But yes, I do think so. And I think crypto, while being anonymous, is also extremely traceable, right? So I think we the US government has demonstrated a fair amount of progress in being able to track down these ransomware folks and get back that cryptocurrency because it is so highly traceable. So I think we think of it as anonymous and no one can tell, who's doing what, but all of the transactions are publicly recorded on the blockchain. So I think we'll continue to develop tools that allow more visibility into the end holder is, and I think that will diminish some of the unpleasant things that crypto have been used for. That certainly is my hope.
Interesting. And another question just came in.
Wow, look at this.
A great question. How critical do you think that a community bank move forward on safekeeping cryptocurrency in 2022, 23, or even later?
How critical? This is where I may point back to my lack of depth in sort of the overall banking industry and sort of how critical that I think you're referring to custodial services is for banks, but I think it's more of an opportunity. It's like, I think when you say how critical, like to me, it would be an early adopter of something that's going to become really important later on. So even if you were to dip your toe into custodying in a very small way, I think it would be really valuable to sort of start to establish your credibility and your reputation there. And I think it would be a natural way to attract clients that are sophisticated in crypto that may be going in a different direction. And I think it would potentially allow you to hold on to some of those customers that, I talked about potentially being siphoned off. So I would say do it, 2022.
There you go. Do it.
Remember my opinions only.
So as Scott mentioned, and it states there, he loves talking about crypto. So reach out to him if you have any questions or just want to continue any of the conversations on the topics that he brought up. Scott, I'm going to go ahead and share my screen now, but thank you for joining us. And we hope to hear from you soon on any updates that is in the crypto space.
Well, thanks everybody. Thanks for the questions and thanks for listening.
Thanks, Scott. So I do just want to round out the conference, our virtual conference, and thank everybody for those of you who did attend all 3 days and dedicating, 6 hours to listening in on the last 3 Fridays and joining us for our CIO panel, our FinTech panel, and HR, and the sessions that we covered over cybersecurity and ransomware, core processing, and lastly, cryptocurrency. You will be receiving an email that has all of the links to access the recordings to these presentations as well as the presentations if there was one. So please feel free to pass along to any colleagues that might find them valuable. And also, please send us feedback. If there's a topic that you'd like to hear from us that you're interested in 2022, send it over. We're happy to accommodate the schedule, the agenda for the financial leadership series in 2022 to the needs that you're looking for. So again, thank you very much for joining us. We hope you have a great holiday, and we'll see you next year in 2022, and hopefully that's in person. Thanks, everyone.